Hi, my name is Joseph-Antoine Migdalani. Today I'm with my associate Karim Zakir, our portfolio manager. Welcome to our quarterly capsule. Before we start, I wanted to say that you have to stay tuned until the end today because we will have a special guest that will be coming at the end of the video to explain a little bit more information on how to get access to tax documentations, RIF payment amounts, how to share some documents with your accountant on National Bank Financial website. So stay until the end, it's going to help you answering a lot of your questions. Going directly in what our audience and clients like to hear about, the market. Karim, how and why 2023 unfold the way that it did?
Well, let's begin by saying 2023 has been a very good year for our discretionary portfolios, the ones you've mandated us to manage on your behalf. And if you factor in all the noise that we lived through in 2023, beginning with this terrible war in Europe that's ongoing, the fact that U.S. Federal Reserve has raised interest rates by 5.5 percentage points over the last 18 months, and the Canadian Central Bank has raised rates by 4.75 during the same period of time. Throw in on top of that the fact that we've had the second, third, and fourth largest bank failures in history, both in the United States and in Switzerland. And then top it all off with another war just in October 2023, this terrible war in the Middle East. With all that terrible noise, we managed still to do quite well. Our portfolios, for instance, the conservative portfolio managed to make a return of over 11% in 2023. Very good. The balanced did over 13%, the growth over 15%, and the max growth over 19%. And I have to stress, this is net of fees. Yeah. And even when you consider our revenue portfolio, the revenue mandate, which is the most conservative mandate of them all, it still managed to eke out 9.5%. Now, this is a mandate with 70% government bonds, 30% stocks and precious metals. And when you look back during the last 5 years, we've had 4 excellent years. Unfortunately, 2022 was the bad year. Now, you've got to expect that. I mean, every 5 years, you're going to have 1, maybe 2 bad years in an investment cycle. I just want to also reiterate that back in January 2023, we had done a capsule. And in that capsule, we had said that we expected a good 2023. And most investors on the street were very negative. It was just terrible. And when it's terrible, what do people do? They have a tendency to not invest. They get scared of investing. The markets were at their lows. And on the contrary, that's the time to be investing. Now, why have the markets done so well with so much bad news? Well, this is a situation where inflation actually helped the cause of corporations. It enabled companies to increase their profits. And consumers were able to absorb those higher prices for goods and services because their salaries are going up for the vast majority of individuals. And when you look at the situation in the United States where employment is at 3.9%, the unemployment rate, and the unemployment rate in Canada is 5.5%, that's full employment. That gives a lot of certainty, a lot of confidence in spending money. So basically when profits go up, stock prices follow. I also want to stress that currently there's $6 trillion of cash sitting in money market funds and short-term deposits. That's enormous amount of cash right now in the system. It's actually $2 trillion more than pre-COVID. This money will find its way into dynamic assets eventually, like real estate and stocks. So that's very positive.
That's going to bring me to my next question. I would like to ask you, what are you expecting for 2024?
I'm expecting another good year in 2024. As usual, it will not be a straight line. Okay? And why do I expect a good year in 2024? Well, first, there's all this liquidity, okay, that's sitting in cash. We are transitioning to a situation where interest rates are going to start coming down and liquidity will only increase. This is in addition to all the cash that's sitting on the sideline. So this liquidity will find its way into the markets one way or another. Secondly, we do expect the economy to decelerate. We could hit a soft patch. We could hit a recession sometime in 2024 or 2025. But the fact that we are in an election year in the United States usually bodes well for the markets. Now, why do I say that? Because the government has to be market friendly. Governments don't get elected in a bad economy. Okay, that's known. So they're going to be very market friendly. And to prove my point, okay, if you go back 20 presidential cycles, that's 80 years, okay, and you look at the last year, the election year, in every one of those cycles, the markets have gone up 18 out of 20 times. The only time they have not gone up are in the year 2000, Y2K, and the technology correction, and the financial crisis of 2008. But even in 1944, during the Second World War, believe it or not, which is an election year in the United States, the S&P 500 went up 19% that year. Now, if you think we're in a bad situation now, imagine living through the war, the Second World War. It was crazy, but the markets did defy everyone's projections and did rise. So I'm bullish this year, but I do expect possibly a drop in the markets between now and the summer. Maybe 5, maybe 10%. Expected, it's normal. This will open the door to deploying capital. This will be a great opportunity to buy. I just want to say that we shouldn't use our personal perspectives. We shouldn't politicize our portfolios and the economy too much. And our job as your discretionary portfolio manager is to be good stewards of your capital, to be careful. Just like a pilot, when he flies you on an airplane, we expect turbulence on the flight, but 99.9% of the time, we arrive to our destination safe and sound. And I expect to do the same. And I foresee over the next 5 years, overall, to be very good. There's great opportunities in front of us, such as artificial intelligence, information technology, climate, infrastructure, so on and so forth. So please stay the course. You will be rewarded in the long term.
Thank you very much, Kareem.
Let's just turn the table, Joseph. From what I understand, there are new limits to the RRSP and TFSA, in addition to some more information on the First Homeowner Savings Account, the FHSA.
Absolutely. So very interesting topic to have every beginning of the year, because it's going to give you some fiscal advantages when you maximize or do a contribution into these registers account. Starting with the RRSP. So for 2023, the maximum contribution is the lesser of either 18% of your annual income or $30,780. You have until February 29th of this year to make your contribution for the year 2023. After that, the TFSA contribution increased to $7,000. Last year was $6,500. So $7,000 for 2024. If you never contributed into a TFSA, you have up to $95,000 that you can put into a TFSA. And finally, the FHSA was a new program that was put into place last year. So you can put up to $8,000 a year to a maximum of $40,000, and every contribution that you make will give you a tax deduction. Very important. If you have children or grandchildren that you would like to help in this project of buying a first property, that could be something very pertinent and interesting to put in place.
Yeah, absolutely. I mean, you get a tax deduction. That's the beneficiary gets the tax deduction.
Yeah.
You can actually invest it today, and in a month from now, buy a property, and you still keep your deduction. But that's extremely, it's very interesting for, like you said, the children of our clients, or even their grandchildren. If you want to help out your children, this is a great means of passing down some money.
Absolutely.
And enabling your children to invest in their first home.
So now it's time to welcome our special guest, Kendra Hutchin, who's our Senior Wealth Associate. Kendra, thank you so much for being with us today.
Thank you for having me.
So you're going to be here to answer a lot of our clients' questions. So I'll let you start with your documentations.
Exactly. I want to cover some recurring questions that the clients ask us every single year. So first and foremost, tax slips. It's tax season, it's time. The burning question is always, when am I going to receive them? So to simplify it, if you have only a registered account, example, an RRSP or a RIF, all tax slips must be issued by the end of February, which means you will receive them beginning of March. If you have a non-registered account, such as a margin account, you could have a delay. There'll be tax slips that have until March 31st to be issued. So we're recommending you don't do your taxes before the second week of April. Let's be safe, make sure you have everything. These are all target dates, of course.
Right.
Anything can happen, it could vary. You could get reissue of tax slips, so don't be in a rush to do your taxes. Which brings me to the next one. In general, your accountants have access to most, if not all, of your tax slips on the Revenue Canada website. But in the event that you want us to mail or send a copy to your client, to your accountant, we have a system called Dropbox. The firm pays it. Your accountant will create his own account. He'll create his own password, and it's a secure Dropbox for all documentation that he can use time and time again every single year.
Great.
So it simplifies everything for you, the client, for your accountant, for us, and most of all, it's secure. We can no longer password protect documents to send via email. Brings me to my next topic again, online access. We are strongly recommending that you go online to consult all your documentation, your statements, your tax slips, internal reports that we can upload to the clients, such as your gains and losses reports and foreign property. This is what we'll be doing for everybody this year. It's important, it's safe. Again, it's your password, you control it, it's there for 7 years. So you'll have your documentation and it's less paperwork at home, which I think everybody likes.
Absolutely.
Brings me to my last topic, on your statements. For people who have RIFs or LIFs, often we get asked, what's my minimum? How much taxes am I taking off? So on and so forth. In your statement, under the heading RIF account, you'll find a box. And under that box, you'll see your minimum, an elected payment amount, taxes to be taken off, how much you've taken to date, and this will start as of January 31st. Your January 31st statement, it'll give you all the information for your 2024 fiscal year. If at any point you have any questions, please don't hesitate to call either Lillian or myself, and we'll guide you through each step of the way.
Thank you very much, Kendra.
Thanks.
I'm sure it's going to help a lot of our clients. And to conclude, I just wanted to say thank you for watching us. If we could assist you with any financial needs, could be for you, member of the family, friends, or any others, please feel free to reach out. We're going to be more than happy to help. See you next time. Thank you very much. Have a great day.